Bearish below 23.21, reiterating what I said, adding to that. Technically, I'm friendly to the market above 22.80. That's this line here. Lines don't mean much to me, but it's a reference point. It's a confirmation that a hurdle has been breached. Okay. If the market drops, I will buy more between this line. This is a monthly chart now, right? So we're talking about a 2 to 6 month trade here. This is not an overnight trade, but it is a trade. Between here and here, I will consider buying more because I look at this as a channel that it may just oscillate around and go up. And then if we get below this line, which is 2021, 2022, I will consider buying more because I think this is where the bricks come in buying.
On Monday, the price of silver experienced a significant nosedive, plummeting over 2.5% from its previous close to approximately $22. The white metal faced substantial selling pressure as expectations for early rate cuts by the Federal Reserve were tempered. VinceLanci, an analyst from goldfixsubstack.com, provides technical analysis, suggesting a favorable market outlook above the $22.80 level. Despite closing below $22.25 the previous day, hinting at potential negative targets, today's positive start and attempts to surpass this level indicate a possible reversal. Market analyst Christopher Lewis at FX Empire shares his perspective, stating, "I do believe that the $22 level is an area that will continue to hold, and short-term traders have already come back into the market looking to defend it. So, it could be a buying opportunity, but I would not get too big though," he said. "If we can break above the $22.50 level, then I suspect that silver has a real shot at going quite a bit higher to the 200-day EMA, right around the $23.20 level." Vince considers a strategic move, expressing a willingness to buy more if the market drops to specific levels around $20.21 and $20.22. The 50-period exponential moving average, positioned near $22.80, serves as a formidable barrier for silver price bulls, posing a challenge for bullish sentiments. Vince also highlights China's ongoing crisis, anticipating the need for stimulus measures that could lead to a rise in silver prices during China's trading hours. The economic concerns in China, combined with evolving expectations of the first rate cut in the Federal Reserve's easing cycle, contribute to significant selling pressure in the silver market, as noted by analysts. Despite silver facing challenges as an industrial and monetary metal, the lower prices attract bargain hunters. While silver underperforms in the precious metals sector, some analysts view the dip as a potential buying opportunity, showcasing the nuanced perspectives within the market. Join us as we delve into insights shared by VinceLanci. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
China is in crisis, no bricks are buying. China will need to finally loosen the reins and let the stimulus come. When that happens, you will see silver up during China hours. I will add to this position then. I'm not saying it's going up now. Number two, fault situation, Shanghai drainage. This is going to be a little tricky for some of you, and I'll get into details some other time, but draining metal means taking it out, not buying it in China. This is a flow trade now, not a stock trade. Meaning, if they're taking metal out of the vault, they already bought it. When the metal goes in the vault in China, that you know buying has taken place because they bought it from the United States. The EFP will be a tell if we are near a bottom again. I've talked about the EFP last year. I'll talk about it again this year, but it's on my radar now. So the Shanghai drainage is not bullish. It's bullish 5 years from now because that metal is not coming back on the market, but it's not bullish tomorrow. You're looking for one-to-one correlations. There's a lag here, and I'm explaining that. Metal sourcing, scrap is the game now. Another thing people don't know much about, but I'm going to help you out here. There is a shit ton of silver in the world above ground in the scrap pile, and it only comes out for one of two reasons. One, the price is high enough to make it come out. Two, the person who's long it is really losing money in some other aspect of his business. As it turns out right now, JP Morgan and the other banks that have China as a client buying silver for them, that's why it's not coming out of the vault as much, or that's why there's none going into the vault. They're shopping for scrap. They're going to other miners. They're going to iron miners. They're going to, they're not going to nickel, but they're going to other metals that you pull silver out of and you heap leach. They're going to them and say, hey, you want to sell your silver? Oh, we were thinking about it. Well, guess what? They're thinking about it a lot more now because the economies in the world are crapping out. So they want to get that silver sold to make a little money. So they are being spoofed by the market and the banks. Not you, not me. Okay? So when that metal is done being sourced, meaning being found, the market will change again. It's like, again, I've said this before, it's like a house that needs to be built on your block. Once that house is built and sold, then your house will go up. Supply needs to go away. Technicals, bearish below 23.21, reiterating what I said, adding to that. Technically, I'm friendly to the market above 22.80. That's this line here. Lines don't mean much to me, but it's a reference point. It's a confirmation that a hurdle has been breached. Okay. If the market drops, I will buy more between this line. This is a monthly chart now, right? So we're talking about a 2 to 6 month trade here. This is not an overnight trade, but it is a trade. Between here and here, I will consider buying more because I look at this as a channel that it may just oscillate around and go up. And then if we get below this line, which is 2021, 2022, I will consider buying more because I think this is where the bricks come in buying. And I will also look at RSI. So I have 1/3 of a position put on.
Vince strategically assesses the market's well-being by monitoring China's gold buying activities. The People's Bank of China has consistently announced gold purchases since November 2022, with a notable 225-ton increase in 2023, reaching 2,235 tons by December. Gold now represents 4.3% of China's official foreign exchange reserves, showcasing a remarkable rise of 287 tons in the past 14 months. In a flexible approach, Vince discloses his readiness to acquire more silver based on the market's dynamics. Whether the market is strong or dipped, Vince remains prepared for strategic silver acquisitions. The recent decline in silver prices, initiated by Chinese investors offloading the precious metal overnight, raises concerns. Analysts suggest that apprehensions about China's economic slowdown may impact the metal's industrial demand, contributing to the selling trend. Vince's adaptive strategy positions him to navigate the gold and silver markets with a keen eye on evolving market conditions. Let's get back to the interview.
These two yellow lines here, this is when the bricks were buying. What happens next year, or I should say this year, right? 3/4 of the way through the year, October, what do you have? The bricks meeting again right before buy season. So I'm looking at this in a, again, 1 to 6 month, 1 to 5 months. This is a trade. Gold, China buying will get filled. Okay. Another thing that people may not understand, but I'm going to say this to you, write this down. It's true. First thing that I was taught as a trader is markets trade to size. Broken markets trade away from size. And in a real market, when there's a size order in the market, it flushes out the other people. I want to buy 5,000, and someone who needs to sell 5,000 says, oh, that's a lot of quantity. I can get all my trading done in one spot. Boom. People pay attention to big size trades. They're block trades. However, in a broken market, when you see a big order come out, I'm a buyer of 5,000, the market runs away from it. That's a broken market. A broken market is a market that doesn't accommodate liquidity. A broken market is not liquid. A broken market is a market like the S&P, when you go to sell 2 S&P futures and the market drops 5 handles running away from you. These markets are broken. The silver paper market is one of the most broken, but the silver physical market has come back in a big way. So physical markets trade to size like a healthy market. Paper markets run away from size. Now, why am I saying all that to you? Because the China buying is physical and it will get filled, meaning they're going to buy it here, they're going to get filled. They're going to buy it here, they're going to get filled. The market will hit their bid. They're not going to have to chase it because it's size, they're telegraphing, and it's physical. The banks right now are looking for someone to hit that bid. They want this buying filled because then they can push it lower. I'm right about that, unless I'm wrong, but I'm right. So the rule is Physical markets trade the size, paper markets run away from them. So with regards to gold, you need the gold buying to get filled on the bid. Again, they don't chase it normally. Once they're filled, then you see how the market acts. When that buying is filled in gold, if the market acts healthy, then I'm going to buy more silver. If the market acts shitty, I'm going to wait for the dip and buy more silver. I'll do some knife catching. So here's as much of the trade as I'm comfortable sharing. Today at 9:47, I'm filled on a spread. Call spread, put spread, none of your business. It goes out about, well, between 1 and 6 months. Oh, the reference point is 2,200 in spot. So this is not a bragging trade. This is 1/3 of a trade I want to put on. This trade is going to probably, I hope, be a loser. Now, I'm totally happy right now. It's a winner, right? I feel very smart. I feel very vindicated, but that's not the idea here.
The silver market appears poised for another year, marked by a notable supply deficit. While drawdowns are not yet critical, the cumulative impact of shortages is beginning to manifest in the price action of silver. As we look ahead, what is your outlook for silver in 2024? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.